evening. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. Let's take a look as to how the market shut up this Monday before we take you through the top headlines. Well, we got off to a fairly decent start, but it was a sell-off on Dalal Street by the day's close. The market breadth also reversed and most of the DIIs continued to remain net sellers. So by the end of the day, we didn't even manage to conquer the crucial 6,000 level on the upside. For the Nifty, it was 59.87. That's where we shut shop. And for the Sensex too, turned out to be a very lackluster session. 19,751, and the sell-off was led by PSU banking stocks. But lots of big corporate stories. We get you all of them after the top headlines. Etihad will take a final call on buying stake in Jet Airways next week. The company's CEO, James Hogan, says the due diligence on Jet Airways is currently on and the report will be presented to the board next week. Global petroleum giant Shell can contest the Income Tax Department's 15,000 crore rupee transfer pricing order. India head Yasmin Hilton says taxing money received by Shell India is like taxing foreign direct investment. The Finance Ministry proposes a 40% stakeholding by companies in banks, even as the debate over giving new bank licenses to corporates rages on. The government feels the move will give smaller banks access to cheaper capital. Bank of Baroda's third quarter profits plunged 22% from last year's levels. The stock tanks in trade as the bank reports a sharp rise in bad loans and a strain on margins. Straight to the equity markets then, and it was a dull day on Dalal Street. So you had the frontline indices, which now for the second day on the trot, the Nifty did not manage to hold on to 6,000. It was a fairly good start, but we didn't manage to maintain that level largely on account of a lot of selling pressure, which is what we've been witnessing from the DIIs. So by the day's close, it was 59.87 as pointed out. For the broader markets too, it did get off to a good start. They were largely in tandem with the way the frontliners were panning out, but as the days ended, they were down and out by close to 1% apiece. But the big story for today was in the aviation space, and Etihad will take the final call on buying stake in Jet Airways next week. The company's CEO, James Hogan, said in a conference call that the due diligence on Jet Airways is currently on. Well, let's get more details on that. Kartika Trehan now joins in from our Mumbai newsroom. Kartika, how long is exactly going to take before the deal is finally sealed?
Well, absolutely. Etihad has made a mention that the due diligence is on with Jet Airways, and they are going to present the due diligence report sometime next week to the board, and post which we can expect some amount of an announcement at least coming in. At least they'll apprise of the deal and where it's headed from here on. Maybe you'll not get more clarity on the structure of the deal and how the valuations are likely to be, but at least we'll get some announcement on from both sides. At least the deal is processing in a fair amount manner. However, right now the Etihad is pretty much sounding pretty bullish. They had a webcast today where they had said that the deal is on and the discussions are rightly in progressing in the way they are. They met the aviation minister, they met also the commerce minister and finance minister when they had visited India, but they are looking for some amount of clarity, at least in the FDI, the rules of the FDI at this point in time. Once that procedure is finalized, they could possibly go ahead and make some announcement coming in. Right now, the deal is definitely, as it's important for Jet Airways, which is involving a lot of money that needs to be pumped in. It's also a major concern for Etihad Airways as well, because this is a deal for them which is also important, expecting some amount of a global footprint which Jet has. So they're looking at expanding that using the entire network base of Jet Airways. Right now we're picking up from our sources that a 24% stake is something that Etihad will pick up in Jet Airways for a valuation of close to about $300 million. There's no clarity on the share sale price. However, we're picking up from our sources at this point that it could be anywhere 600 rupees per share deal. So both ways, it's definitely important for Etihad as well as for Jet Airways, because it's going to give a network that would reach larger than US and Europe. These are the kind of networks they are looking at focusing on, so that is what it will help them. Earlier, the Etihad Airways CEO, James Hogan, had spoken in the webcast, and this is what he had to say.
Jet Airways have nominated to the stock exchange in India that we have expressed interest, and we're undertaking due diligence. We were in India last week. We met the Minister of Civil Aviation, the Minister of Finance and the Minister of Commerce to understand the new rules under the Foreign Direct Investment Scheme. We also wanted to understand the issues that have impacted Indian domestic aviation, how they consider that would change in the coming years. And what we're in a position now is completing our due diligence, and in the next week we'll present that to our board and then we'll take a view.
Okay, thanks very much, Kartika, for bringing us all of the latest details. So 1 week is when we can expect an announcement on that front. But moving on then to the banking space, and the big result for today was Bank of Baroda, and it was disastrous on all fronts, and the stock really bore the brunt of that. 7.3% lower by the day's close as it delivered a dismal third quarter earnings, with the profits down by 22%, coming in at 1,012 crore rupees, as higher provisioning for the non-performing assets dented the bottom line. You also had the asset quality, which deteriorated considerably this time around. The gross NPA stood at 2.4% versus 1.98% on a quarter-on-quarter basis, as well as the net NPAs this time around, which took quite a beating. Well, on that note, let's hear out the management of Bank of Baroda on the road ahead.
Net profit compared to the same period, there is a reduction. I think apart from the NPA provisioning, the provisioning NPV requirement for the restructured portfolio, and some difference in treasury income and slight compression of NIM. I think broadly, if I look, these are the contributing factor for this day. Slippage had been to the tune of, for the domestic book, it had been to the tune of 1,607 crore. My margin for the quarter which has just ended is 3.08. Our sense is that we should be able to defend our margin above 3%.
Okay, that's the word coming in on Bank of Baroda, and in fact you had most of the sectoral indices which saw quite a tumble by the day's close, led by the PSU lot. Apart from that, it was healthcare. The overall power index also didn't manage to hold up. The only index which did witness a flicker of green today was the auto pack, so by the end of the day it was higher. But some of the big index losers came in the form of Bank of Baroda. Then you also had an IDFC, Jayaprakash Associates, and Ranbaxy too plummeted by the day's close. Some big results which came out today, apart from Bank of Baroda, you had JK Cement, which put out its numbers. The profits were up by 25% at 53 crores, and the top line growth was at 687 crores versus 615 crores. That's higher by 11%. There was also the news on JK Cement that we did exclusively, that they will be launching a 200 crore QIP within the next 2 weeks, which will have a green shoe option of 100 crores. Well, away from that, Jubilant Foodworks also put out its numbers, and the street wasn't too pleased. The profits came in higher by 28.2% at 37.7 crores, and the net sales were higher by 39% at 385 crore rupees. It was the EBITDA margin that shrunk this time to 17.4% versus 18.9%, with the same-store sales growth at 16.1%. Island FS Transport also put out its numbers. The stock ended high by just about 2% by the day's close. 104 crores, that's high by almost 19%, with the top line growth coming in at 1,764, seeing a good bump up of almost 40%. J&K Bank also put out its numbers in a decent set at that. The profits came in at 289 crores, that's versus 213 crores. Net interest income for the bank stood at 594 crores, higher by 32%. Asset quality, that was a bit of a problem. Gross NPAs came in at 1.6% versus 1.59%, and the net NPAs, they did see a bit of a cool off on a sequential basis. Some stocks in focus. IDFC posted its numbers, didn't react too well. Also, there were reports that the Central Crime Branch Police in Chennai has registered an FII on the company indulging in criminal conspiracy, but the management refuted all those claims. Despite that, the stock was down and out. Berger Paint posted its numbers, hit a new high. The consolidated top-line growth came in up by 17% at 917 crores. The net profit was higher by 55 crores at 76 crore rupees. EBITDA was also higher by 36% to come in at 116 crores, and margins witnessed a good expansion. Tata Motors and Ultratech Cement, remember on Friday you did witness a freak trade in both of these counters, on account of which they tumbled, but you did see some buying activity kick in, and they were both higher by close to 3%. IFCI was in focus as reports indicate that the government may dilute stake in the company. Ranbaxy was down and out as Lipitor, they said, faces a recall threat from the US consumers, which is why it ended close to the lowest point of the day. Divi's Laboratories had put out its numbers over the weekend and it was disappointing. They came in below estimates with a net profit at 144 crores, net sales higher by close to 28%. Margins took a hit on account of high raw material prices as well as power costs. Indian Bank put out its numbers disappointing at that. Profits down 37% to 331 crores and asset quality sharply deteriorated. BHEL today was in the limelight on the downside as a slew of brokerages came about and downgraded the stock. CLSA put a sell rating, reducing the target price then to 195. JP Morgan, Goldman Sachs with some of the other counters that followed suit. Gujarat NRE Coke was in focus. Remember, it rejected JSPL's core takeover bid for the company, and it also came out in the news that JSPL will not be revising that bid price. Some of the big gainers today, Tata Motors, Ultratech Cement as pointed out. Apart from that, you had HDFC and along with Berger Paints, Asian Paints too witnessed good traction. Well, that's pretty much how the activity panned out on Dalal Street. What about the F&O activity for today? Let's get in Navneet Saluja from our research desk who's standing by. Navneet.
Well, Avan, an extremely volatile session. Again, if you look at the Nifty February futures, they closed below the 6,000 mark at 5,994. And if you look at the premium, that's come down to about 7 points compared to spot Nifty. Remember, this premium was above 30 points on Friday's closing. And in today's trading session, Nifty February futures added 13 lakh shares. Well, if you look at the Nifty PCR, that slipped to about 0.89 compared to previous closing of about 0.94. And major amount of call writing was seen in today's trading session. Have a look at strike 6,300. That added significant 17 lakh shares. You also had 6,000 strike adding about 10 lakh shares. Whereas in the put side, major amount of open interest addition was seen for 5,900 strike adding 9.5 lakh shares and 5,800 strike added about over 6 lakh shares. And talking about the stock futures among the Nifty gainers, as you mentioned, well, there was a freak trade in Tata Motors and Ultratech in Friday's trading session. Good amount of recovery was seen today, so long positions were seen on the futures side. You also had HDFC Bank, Asian Paints and DLF which did well for themselves. Long positions seen there. On the short side, well, reacting to bad set of numbers was Bank of Baroda and IDFC. Alongside you had Ranbaxy and BAIL which were down and about. Short positions built up for these two counters. Talking about the mid-cap space, Opto Circuits and Adani Power were down sharply today, about 6 to 7%. Huge amount of short positions were seen there. And on the long side from the mid-cap space, you had REC, PFC and Bhushan Steel which did well for themselves. Long positions seen for all these three counters. Well, if you look at the turnover, the participation was quite less. Today the total turnover on NSE towards the end was about 87,000 crore.
Thanks very much, Navneet, for giving us that detailed perspective. Moving on then, let's get in a prominent voice. Chetan Iyer, Managing Director and Asia Pacific economist at Morgan Stanley, is convinced that the government can rein in fiscal deficit at 5.3% for FY13. He expects another 50 to 75 basis points rate cut on the back of low inflation and current account deficit. Let's listen in.
I think the pickup in investment will take much longer in this cycle. In the initial phase, actually, before we see a meaningful recovery in growth, what we would be watching is the improvement in the macro stability indicators, and the market will actually feel much confident with this macro stability indicators improving. So we are watching CPI, current account deficit, and deposit growth. As long as these indicators move in the right direction, that will be more important in the first phase before we actually get a meaningful recovery in growth rate. The government has essentially worked in two ways to try and control fiscal deficit. First is to reduce oil subsidy, and second is to cut down the government spending excluding interest and subsidy. An interesting stat to note there is that the government spending excluding interest and subsidy is down to 5% year-on-year growth in the last 3 months. We're expecting about 50 to 75 basis point additional rate cut in 2013. And we think that the stagflation type of environment will be reversing as the government's effort bears fruit in form of deceleration of inflation and a gradual recovery in GDP growth rate.
Well, global energy giant Shell has hit out strong against the taxman's allegations that the Indian arm of the MNC underpriced an issue of shares by 15,000 crore rupees. Now, Shell India claims that taxing the money received by it would be like taxing FDI, which is contrary to law. Let's get in Ashwin Mohan, who was the first to break the story to us on Friday, to join us with the latest exclusive details. Ashwin.
That's right, Awan. In fact, this is a massive development because this practically opens a brand new chapter as far as litigation between MNCs and the Indian Tax Department is concerned. Shell is quite keen on challenging this massive 15,000 crore Income Tax Department transfer pricing order. They have two options to do so. Either they file a writ petition at the Bombay High Court, or they wait for the final order from the assessing officer and go to the dispute resolution panel or the CIT appeals. Meanwhile, let's try and understand what Shell's major argument. Shell is arguing that as far as the money received by it is concerned, if the Income Tax Department seeks to tax that money, then that effectively means that the Income Tax Department is taxing FDI. Shell says that taxing FDI is contrary to the law of the land, and that it is also contrary to the entire FDI wooing drive that has been in fact recently initiated by Prime Minister P. Chidambaram. So therefore what Shell is trying to indicate is that there seems to be a disconnect between the thought process at the top, at the Finance Ministry, and what is actually being executed at the ground level by the Income Tax Department. Shell has also in fact said that the money that was received by it because of the issue of shares to its group entity was a capital receipt, and you cannot tax a capital receipt. It has also gone ahead to say that funding subsidiaries through share sales is quite a common activity both in India and globally, so why pick out Shell? And finally it has gone ahead to say that the Income Tax Department has no business revaluing the issue of shares by Shell. So that in sum and substance is the main argument of Shell. It is a very important development, and we'll have to keep a close watch out for what kind of legal action Shell indeed takes, because keep in mind that this comes in at a time when there is a lot of talk about the aggressive policies by the Income Tax Department harming FDI. That's clearly Shell's main argument, that if you tax FDI, you're going to create more uncertainty, and therefore that is inconsistent with what the Finance Minister P. Chidambaram has been doing as far as his overseas roadshows are concerned.
Okay, Shell clearly vociferous in its reaction, lashing out at the IT department. Thanks very much, Ashwin, for giving us all of those details. Moving away from that into some news in the telecom space, and round 2 of the Vodafone Indian government negotiations began today. A Vodafone team, including Matthew Kirk and Aljit Singh, met with the Revenue Secretary Sumit Bose today to negotiate the 14,000 crore rupee tax case. Suchetna Rena joins in on the phone line with more details. Suchetna, what are you picking up on the case?
Sources in Finance Ministry tell us that yes, round 2 has begun today. A team from Vodafone did meet the Revenue Secretary Sumit Bose at the Finance Ministry today. The team included Aljit Singh and Matthew Kirk of Vodafone PLC. The main issue of negotiation here is that the Indian government has raised the tax demand of 14,000 crore rupees, which includes about 7,000 crore rupees in the basic tax amount. The remaining is what Vodafone has to in interest to the Indian government. But sources in Finance Ministry tell us that Vodafone does not want to pay the interest. They want a waiver of the interest amount of about 7,000 crore rupees. They also want a waiver of the penalty amount. But the problem that the Indian government has is that, yes, they can waive the penalty that has been provisioned by the income tax laws, but there is no way that the interest at this point in time can be waived. Sources indicate that Vodafone also wants a substantial reduction in the basic tax amount of about 7,000 crore rupees which they have to pay. And so therefore sources in Finance Ministry tell us that the negotiations will have to go on for some time now.
Okay, thanks very much, Suchetna, for bringing those details. So still some time away, but perhaps the truth is on the cards. Remember, Vodafone does want a waiver of the interest payments as well as the penalty, and the Finance Ministry can waive the penalty, but no provision as of now on the interest waiver. Moving on then, and while the debate is still on whether corporates should be given banking licenses or not, Finance Ministry has suggested that the RBI that corporates should be allowed to buy as much as 40% stake in existing banks. Mrinalini Krishna has that story. Let's take it straight across to her. Mrinalini, what exactly is the Finance Ministry's suggestion, and is the regulator on board?
What we are picking up from sources in the Finance Ministry is that Finance Ministry is written to the RBI asking that corporates may be allowed to pick up a 40% stake in existing banks, and they may be given licenses to operate in a joint venture structure. Remember, corporates can pick up only up to 5% stake in banks so far. The rationale really, as we are being given to understand, is that smaller banks will get more capital and they will have more operational efficiency as far as the corporates are concerned. For them, getting into the banking space will be cheaper. This way, the cost will come down significantly, as there is a semblance of a banking infrastructure that is already there. Branches are there. So that means that for new entrants, the cost will be significantly lower. But as far as the eligibility criteria is concerned, what we are being given to understand that even for this kind of an arrangement, the corporates will have to follow the fit and proper rules of the RBI. The minimum capital requirement will stand at 500 crore rupees, and the capital will be locked for a period of 5 years. Remember, even in the past, we've had cases where where corporate houses like the Wadias or the Ruyas have tried to enter the banking space. RBI has always moved to block that move. It's perhaps still not very comfortable with corporates coming into the banking space, but as far as this proposal is concerned, with the Finance Ministry pushing a sort of joint venture arrangement, we will perhaps have to wait for RBI's final guidelines as far as new banking licenses are concerned, that are expected to come out very, very soon.
Thanks very much, Mrinalini, for bringing out those details. On to the top national stories at this hour. And in a major blow to the IPL team, Rajasthan Royals, the Enforcement Directorate has slapped a 100 crore rupee penalty under the FEMA violations. Shilpa Shetty's team has been given 45 days to clear the penalty with an option to appeal. Moving on, and the Odisha government began its land acquisition process in Jagat Singhpur district for the Korean company POSCO today. But just as soon as the process started, it was met by heavy protests from the villagers. POSCO's Odisha project has run into major delays, mainly on account of environmental concerns and opposition from farmers over the land acquisition. 1.5 years later, the villagers are still opposing the acquisition drive, and they were lathi-charged by the police. And 18 months after his appointment as Solicitor General of India, Senior Advocate Rohinton Nariman has resigned from the post amid speculation that the decision came over his differences with the Law Ministry. He was appointed Solicitor General 2 years back by the UPA government after his predecessor Gopal Subramaniam had resigned. And a Delhi court today framed charges against former Commonwealth Games Organising Committee Chief Suresh Kalmadi and 9 others for allegedly cheating, conspiring and causing a loss of over 90 crores to the Exchequer in a games-related corruption case. The accused have also been charged with offences relating to forgery and use of forged documents as genuine. But Kalmadi pleads that he is innocent. With that, we come to an end of this edition of Business Day. Thanks so much for watching. Keep it with ET Now.